Yeah, the question on capital reduction. So you can see that I noticed that this question was repeated twice. Like this one, the name of the owners of the business is elders, and this is a question. And this is also another question I lifted from the first question. So you can see that they're actually the same with different names. This is elders. This is elders. This is the bank here. So you can see that they are actually the same figure. You can see the balance sheet. And see the balance sheet here 196,000, 196,000. And this is 196,000, 196,000. The same question but different companies here. So it's better you get familiar, just familiarize yourself with the question and everything that has to do with capital reduction. So let's get started. So question one says that what are the reasons why a company may decide to reduce its capital? That's 3 marks. Then stated is the balance sheet of Elders Limited as of 31st December 2010 below. So we have authorized capital 240,000 shares of 1 naira each, which is 240,000. Then we have the issued capital 1,000 ordinary shares of 1 naira each, 100,000. 80,000 ordinary shares of 1 naira each, 80,000. Bank overdrafts 4,000. Creditors 12,000. You can see actually the same question here, no difference. Then on the other side, we have the freehold L&B. We have 25,000. Freehold land and building, 25,000. Machinery and plants, 55,420. Patent, 67,000. Stocks, 8,250. The debtors, 4,738. Preliminary expenses, 5,000. Cash account, 16. Balance at debts, 30,532. Then resolutions were passed that the 1 naira preference and ordinary shares be reduced to the same number of fully paid shares of 70 kobo and 50 kobo for the respective classes of shares. That the sum thus rendered available be applied as follows: the balance to the debit of P&L and preliminary expenses to be written off. The machinery and plants to be reduced to 40,000 naira. 1,000 naira to be written off the stock, the balance to be utilized to reduce the patent account, that the authorized capital be increased to 240,000 naira made up of 300,000 ordinary shares of 50 kobo and 120,000 preference shares at 75 kobo each are required. Capital reduction account, preference share capital account, ordinary share capital account, the balance sheet extract after the above exercise, that's 17 marks. So I'm going to start from going over the meaning of capital account, the meaning of capital reduction account rather. So I made a small note for us to go over. So we have the capital reduction is the same as reduction of capital. It means the diminution in the nominal amount of the share capital of a company. Now, what are the key words here? We have the share capital, nominal amount, then paid up amount. So it is also a reduction in the paid up capital of a company. So I stated out the keywords here: share capital, paid up, and nominal value. So the paid up is the amount of money a company has received from shareholders in exchange for shares of stock. It is like when the company sell their shares, the amount that they have received so far from the buyers of the shares, which are the shareholders, is called paid up amount of paid up capital. Then the nominal value is the lowest price shares can be sold for at initial issuance. That is, the amount is like the selling price. Yes, nominal value is the same thing as the selling price. So then the next question is, what are the reasons for capital reduction? Why do companies decide to reduce their capital? So number one is that if there is an accumulation of trading losses representing the result of several years of adverse fortune in the pursuit of his business. Two, if there are capital losses of an extensive nature requiring drastic revaluation of the assets of the company. Then The third reason is that if the cash resources of the company are such that there seems no likelihood of that cash ever be required for the business. Now let's go straight to the computation the of the question. So here's the computation of a capital reduction account. So we have a table containing the serial number, the narration or description, then the column for the debit and the credit side. So the first item that is coming here will be the preference 80,000 units share capital 1 naira minus 75 kobo. So you will notice that from the question, the value for preference share is 80,000 units or for 1 naira each. But in the additional information, we are told that the preference share and ordinary share be reduced to the same fully paid shares of 75 kobo and 50 kobo respectively. So this is a new value um for the unit of the preference share. This 75 kobo is for this preference share. That's why 50 kobo is the ordinary share. So that is why it is going to be reduced. That's why they call it capital reduction account. That is to know the real value of the shares after it has been reduced. So 80,000 units times 1 naira minus 75 25, so 25 times 20 times 80,000, we are now 20,000. So capital reduction account will be on my credit side, this will be on my debit side. So the concept is that since this perfect shares on the debit side, when you prepare your capital reduction account, it will be on the debit side, then the capital reduction account will go to the corresponding entry, which is the credit side. So we have the 100,000 ordinary share capital. So it was initially 1 naira, but it was reduced to 50 kobo. So that will be 50 kobo times 100,000 units. That amounted to 50,000, which is on the debit side. Then the corresponding entry will now be capital reduction account, which is on the credit side. So the next one is the capital reduction account, 30,532. And P&L account will come in here. So this value is coming from P&L from this question P&L, which is on the credit side of the balance sheet. So the P&L will definitely be on the credit side, while the corresponding entry will be on the debit side. Then for the preliminary expenses, since it is on my credit side of the balance sheet here, going to be on the credit side of the capital reduction account with its corresponding debit entry, which is the capital reduction account. Then the next value is my plant and machinery, which is this value. Then the corresponding debit entry over here. The next one is the stock. My stock is 1,000 naira. We notice that there are two kinds of stocks that we mentioned in the chapter. One is on the old balance sheet, while one is in the additional information C. It will be told that 1,000 naira to be written off the stock. So it will be the stock from the additional information is what we're making use of. So the stock, since it is on the credit side of the balance sheet, it's actually on the credit side here. It is corresponding to the debit postage, the patent. 18,148 again, after reduction of 18,048. Then the next thing to compute are is the capital reduction account. So all these values that were on the debit side will be on the debit side. Okay, just like preference, I have the preference 800, this preference which is on the debit side. Sorry, capital reduction account, which is 20,000 on the credit side, so it is coming here. To where you have the capital reduction account again, but this is a ledger capital reduction account, which is credit. That is the nourishing capital. That's why we have it here. Go to the other column too. Go to where you have a capital reduction account, which is on the debit side. So the description is going to be P&L. This is your debit side. We have P&L. For the preliminary expenses, the capital reduction account is on the debit side. So go to your debit side, you have the preliminary expenses like that. So that's how we amounted to the 17,000. You notice that every both sides of the ledger balanced. So you prepare your preference share account. So you have your since the for the preference share account, like I said earlier, whatever you have from the old balance sheet is what you call your balance going forward. So in your balance sheet, you can see that my preference share has a debit entry here on the balance sheet. So when you are creating a ledger, it's going to have a corresponding credit entry. That's why it is on the credit side. We have 80,000 naira. Then go to your capital reduction, which is coming from here. So the preferential capital reduction, which is this value, 20,000 naira. It's been big on my debit side. Let's see. This reference now is on the debit side, so it's coming to the debit side of the ledger. 10,000 naira. So which side is lesser? You can say the debit side is lesser than the credit side. So you have to deduct 20,000 from 80,000 to get 60,000. So they're both sides of the balance. So that's difference is what we call the balance carry down. So you write the balance box down here. The ordinary share capital, the same concept. So your balance goes forward. This is coming from the full balance sheet. This is coming from the capital reduction account. So the difference is going to be this 6,000, which is our balance carry down. And don't forget to write the balance both down so that you can attract more marks. So that is all about the ledgers. So we've prepared based on the question, we have to prepare the capital reduction account, capital reduction account, preference share account, ordinary share account. Then we move to the balance sheet. So here is the balance sheet. So we have the ordinary share coming to 240,000 share made up of 200,000 ordinary share of 200 each and 120,000 preference share at 75 per each. So this is coming from the journal information 3. Additional information 3. This is additional information 3. This is the information that we used in the new balance sheet. This is the information that was used in the new balance sheet. So for your issued capital, we have your 100,000 ordinary share at 50,000 each. We have 50,000. 800 preference share at 0.5 which is 60,000. The bank overdraft is coming from the balance sheet. The credit is also coming from the balance sheet. Then on the credit side of the balance sheet, we have the credit regular and lending machinery and plants, which is coming from working one. So this is the working as one. We have 55,420, 15,420, which gives us 40,000. So for your capital reduction account, like I said earlier, in your balance sheet, the preference shares on the credit side. So it's coming to the credit side here. So we are making use of the reduced amount that was used here. So, and like I said, the stock that we're using here is one from the additional information, which is 100,000, which is 1,000. So for the patent, so you go to additional, so you will notice that the patent value in the full balance sheet is 67,000, while the one that was used in the capital reduction account is 18,048. Now, additional information. Additional information, the last additional information here stated that the balance to be utilized to reduce the patent account. So it simply means that from the local things, my credit side is higher than my debit side. So this process amounted to 70,000 naira. So the difference between my credit side and my debit side amounted to this value, which is the patent value. So that is how this 18,000 gets derived. So for the balance sheet now, the patent is from additional information working stream, which is this value. We have 67,000 minus 18,048, which is this value. For the stock, this is old stock, and this is the one that was giving the additional information. So I'm subtracting, I'm going to have the right this value. So for the debtors, the cash from the balance sheet. So that is how we arrive at this balance sheet.